Well, folks, unfortunately, I have to share a lot of bad news and data in this video. The economy is collapsing right beneath our feet. I want to show you everything that's going on. A lot of us have obviously had concerns about the economy. I did a video back in January, obviously, preparing for recession and some moves I was personally making in my life at that time to kind of get ready for this. And as this year's going on, it's looking more and more like recession is a definite possibility, and it's probably already here, to be honest. And so I want to show you all this data. We're going to go through all this in this video. And also, I'm going to share a message I gave to my private stock group last night around 2 a.m. I sent them a message to kind of get them mentally prepared for what's about to happen. I'm going to share that message with you guys as well in this video because I think it's an important message, okay? So mortgage demand just fell to the lowest level in 22 years amid rising rates and slowing home sales. 22 years. Applications for a mortgage to purchase a home fell 7% on the week and were 21% lower from a week a year ago, essentially, right? Refinance demand dropped 6% for the week and is down 75% year over year, 75%. So when you see these numbers, the thing you gotta understand is, and it's just a start. It's going to get worse. When it comes to real estate, the mortgage demand is going to continue to drop. Home sales are going to continue to drop. It's just going to get worse and worse over the summer. Refinancing is like done. Like that's done for probably years. Honestly, refinancing is done for years because even when mortgage rates drop back down, like it's still going to be just dead zone. So refinancing is done. Mortgages are starting to dry up. Home buyers are drying up left and right. And this is a story that's it's just a nightmare that's just going to get worse and worse and worse. This came out about 24 hours ago. Target warned investors Tuesday that its profits will take a short-term hit. We'll see about that as it marks down unwanted items, cancels orders, okay, and takes aggressive steps to get rid of inventory. So basically, Target's just going to try to discount a bunch of stuff in their store that they basically can't move, that they've ordered too much of, and now they got to cancel orders. Guess what? As I say, there's no such thing as a free lunch. So somebody's taking the hit on those canceled orders as well, on top of Target taking this massive inventory hit. So now Target's going to try to discount things. But here's the huge issue if they're trying to mark down a bunch of items, and this is a massive, massive issue, is you don't know if you're going to actually move those items. And think of it like this, right? There's Robinhood, right? Robinhood used to have this huge valuation on it, before they went public and even when they went public, right? And this stock has been heavily discounted. The stock is down 87%. And you still can't find people to buy this dang stock. It's trading, this market cap, if it falls another $1 a share, its market cap will be trading under the amount of cash they have on the balance sheet. But you can't find somebody to buy this. So Target now can put a bunch of stuff, I guess they extra ordered or whatever, right, on discounts and try to clearance it off. Well, that sets off kind of a retail war because then the next retailer has to try to discount and put things for as cheap as possible. But at the same time, if the buyer is not there for that, right, if you are going to discount bathing suits, but because you ordered way too many bathing suits, but enough people, even if they see it 50% down, still can't buy it or don't want to buy it. Like, it doesn't mean you can necessarily move that inventory, right? And so that's an issue. And if you're talking about consumers potentially having a limited amount of money in their pockets to spend on those other items, right? Well, then you're in a situation where that money's taken out of something that could have been spent somewhere else, right, on this other item. So this is a whole dilemma and issue, and just because you discount and clearance things off doesn't mean necessarily you're going to move it. But we have huge inventory problems now at some of these retailers. United States consumer sentiment. This is something that is very important to follow if you're wondering how the consumer is feeling about the economy, how confident they are in spending money, things like that, right? This is their confidence level, and this is the biggest thing you can look at for judging that. And it's always been since I've been in the financial market since 08, 09. And if you look at the past 25 years when it comes to consumer sentiment, usually when you get up around 100, that's great. That means the economy is doing usually very, very well, and consumers are very, very confident to go out there and spend money and buy homes and buy stocks and all those things, right? And to go make purchases. When you start falling to around 80, that's kind of where you should usually expect to be, in the 80-ish range, maybe 85, 90, something in that, right? When you fall below 80, you're getting into trouble. When you fall below 60, you're in big trouble. The consumer sentiment is now below 60, which puts us back at ranges we were basically in the last massive financial recession. And so this is extremely bad news. This basically means that consumers, they're not confident to spend a penny right now. And maybe it's because of inflation and they don't have the pennies to spend right now. And so if you don't have that money to spend, you're not feeling very dang confident. And there's just nothing that can make consumers very confident right now, right? And this lack of confidence, I think, comes from inflation and people being sliced and diced by that. I think it also comes from a lot of people feeling like we're in a bubble. I think it can also come from a lot of people aren't super confident in necessarily the folks that are leading the country right now. And I that's not just coming from, always there's going to be one side that's kind of mad at the other side, right? But I think, honestly, both sides are not very confident in the folks that are leading everything right now, whether you talk about the people in office or whether you're talking about the Fed. I don't think people have confidence in any of them, to be honest. And that's a huge problem, because if people don't have confidence in those individuals, it leads to confidence issues in spending. And even if people do have money to spend, they're not as likely to go out there and spend because they're not feeling as good about themselves, right? And so this is just horrible news, guys. Horrible news. And don't be surprised at all if this actually drops lower. And the scary part is, we haven't even started to see any major layoffs. We're going to get into some layoffs in just a minute, but we haven't seen like the unemployment rate go crazy and stuff. Imagine where consumer confidence is going to go if unemployment all of a sudden jumps to 4%, 5%, 6%, 7%. We're going down to levels that probably are lower than we were in the great financial crisis. Think about that for a moment. That's insane, man. That's insane. Investors have no confidence right now. Absolutely none. I've been showing this for quite some time now, at least this entire year. And this shows you forward Ps that basically, like mid caps are trading at and small caps. Investors have no confidence in this market right now. And that's why you see these stocks trading at forward Ps that you just really haven't seen in a long time. Investors have no confidence right now. They're not willing to buy mid caps and small caps right now because they're unconfident in the whole numbers, like revenue numbers, profit numbers, what companies are going to do, where the economy is going. Investors aren't confident, so they can't buy these sorts of stocks. But it's much bigger than this. I mean, much bigger than this. Look at this, okay? The biggest of the big companies, people are not confident in. Amazon stock in the past 6 months is down 31%. 31% down in the past 6 months for one of the biggest companies in the world. Tesla stock is down over 30% in the past 6 months. The most exciting of the big cap stocks out there, right? People are not willing to buy that stock right now. Investors are not willing to buy that stock. That's why it's down 30% in the past 6 months. PayPal is down 54% in the past 6 months. One of the biggest payment-related companies in the whole world, right, is down 54% in the past 6 months. Investors are so unconfident. They will not buy PayPal stock right now, right? NVIDIA stock, one of the biggest game-changing companies in the entire world, is down almost 42% in the past 6 months. Investors are extremely unconfident in all these big dog companies. The NASDAQ in general is down 23% in the past 6 months. And yeah, it's come back since it was down over 30% a few weeks ago. But, it's still down quite a bit, right? And a lot of people are wondering, are we just getting ready to take another leg lower? Because we've seen that consistently play out, where we've had a comeback and then a down and then a comeback and then a down and then come back down, come back down, come back down. And so maybe this is just another comeback to go down again, right? Investors are not confident in companies, revenues, EPS, profits, margins, anything. And think about this for a moment. I mean, just let this process for a moment, right? I don't blame them, because look at what just happened with Target. They reported a disaster quarter, and then 3 weeks later, they're coming out and saying, it's even going to be worse. In 3 weeks? Like, holy smokes, man, how bad are things getting that fast that in 3 weeks, all of a sudden you're like, it's even worse than we thought. Look at the Snapchat situation. That company came out with earnings a month later. They're like, oh, dude, we're not even getting close to those numbers we thought we were going to hit. And that was in a month. So are things really getting that bad that fast that these companies are basically in a full-scale panic mode now, where they're like, these numbers? And so investors are having trouble trusting anybody. It doesn't matter if it's Walmart or Target or whether it's Snapchat or Amazon. Like, it doesn't matter what are these companies, like, investors are looking at and they're like, I can't trust a thing right now in this market. And that's an issue. That means investor confidence is not in a good place at all, okay? Look at lumber. Lumber is down. This is on a 3-month chart for lumber. 56% 8%, and it's just crashing, and it's showing no signs of recovery. Honestly, it's showing no signs of recovery. I mean, where's lumber going? And this basically shows you that there's no confidence in likely what's going to happen with real estate, okay? Because think about, like, what are homes in the United States built out of? Lumber at the end of the day, right? Wood, like that's the main construction product. So, this guys, oh boy, okay? That's trying to forecast a little something that's coming here, right? Now, simultaneously, we have the worst thing in the world pretty much going on that you could have for the economy, or one of the worst, and that's oil going insane. Now, the last time oil went insane and on a crazy parabolic run was 2008. And my gosh, there's so many similarities between this and '08. Some things are far worse, or some things are far better than '08, but I can tell you, it's scary, the similarities. And we have oil just going on this absolutely insane run for this past year, right? Into these prices, while consumers are already getting sliced and diced with inflation from every other angle in the world right now, right? And simultaneously, this makes, the business climate just much tougher. Flat out. Because think about the transportation of products, anything, right? Think about somebody trying to go on vacation. Like, no matter what, this is bad. Other than oil and gas stocks, this is horrible. This is horrible for the overall economy. And honestly, even for oil and gas stocks, this is a bad thing long term, because it ends up putting you into recession, which, guess what? Hurts oil and gas demand. And so this is not good, okay? Look at this. Just today, oil prices, gas prices hit all-time highs. Almost $5 a gallon on average. The national average is almost $5 a gallon now. National average. And we still might have another month or two of gas prices going up. And even when they start coming down, they're still going to be insanely high. Like, let's imagine this for a moment, right? Let's imagine over the next, let's say a month from now, oil peaks, gas prices peak. So let's say a month from now, national average is $5.50 a gallon, all right? And let's say then oil price starts to come down. All right. Well, gas prices are still going to be ridiculously expensive. So they come down to $5. It's still $5 a gallon. So let's say they come down to $4. $4 is still super high on a national average. So that's the thing, when you get up to these sorts of insane numbers, it's still ridiculous. And so even when we start to get some, oil price start to go down, whether that's in a month from now, or 2 months from now, or 3 months from now, or 4 months from now, when that does start to break and starts to come down, gas prices are still going to be insanely expensive for basically the rest of this year. It's just a question of how expensive are they. Are we talking 5s or are we talking 4s? And then in 23, maybe we can talk about, gas prices coming down to more realistic ranges, okay? But this is bad. Diesel is pushing, guys, diesel could push over 6 soon. That's a disaster, okay? Now, the Fed GDP tracker just showed the economy could be on the brink of a recession. That's not good, because if anything, we know the GDP stuff is kind of like, and the CPI and all that stuff, the government data, people have a lot of trust issues with anything government related. So when a government related thing is showing you bad stuff, that's extra not good, okay? Now, the issue we have here is the Fed is very hell-bent on raising rates, okay? And so we could get into a situation where we start to see the unemployment rate start to climb this summer, okay? And I'm talking in a real way. Layoffs start to happen in a real way this summer. Simultaneously, the Fed will keep raising rates, right? And the reason being is they're going to say, we got to get inflation down. And so inflation is coming down, but let's say inflation's at 6%, right? That's still way too high for the Fed to not keep raising rates. So they're going to keep raising rates into a situation where we could start having job losses. Now, here's why this is extremely scary and why everybody should be very concerned about this, is the unemployment can climb so fast, it's ridiculous. For instance, if you look at the great financial crisis, right? In a matter of months, the unemployment rate went from the 4s to 9 to 10 range in months, okay? And so we could be in a situation where the Fed's raising rates, right? They're raising rates while simultaneously the unemployment goes to, let's say right now it's at, 3.5, 3.6, something like that. It also goes to 4. And the Fed's like, well, unemployment's still very low, so we're going to keep raising rates. We got to get inflation down. And then it goes to 4.5, and they're like, well, we still got to keep raising rates. By the time they adjust and say, okay, we're going to stop raising rates, we're going to start trying to help out the economy, by that time, in a matter of a month, then unemployment can also jump to 5, 6, 7, 8, 9, 10. It happens quick. It happens really quick. And the Fed will lag on that just as they lagged with, obviously, inflation and raising rates when they should have been raising rates and cutting off money supply last year, so we wouldn't have been in such a pickle, right? They lagged on that. They're going to lag likely on this other side. And so this is not a good thing, okay? And it can lead to unemployment going up very, very rapidly and quickly. Bird is laying off 23% of its staff. This just came out here today. Just another one of those, private companies that's, now I guess they're a public company. I didn't even know they were a public company. That's pretty crazy. Jeez. I wonder what their stock price is at. But they're laying off 23% of their staff. But this is obviously just another one of those companies that was a private company that, all these private companies, here's what's going on, guys. VC money's drying up fast. And I mean really, really rapidly. All these VC companies are likely going to have to lay off employees. There's just no other way around it. A lot of these companies are going to go under. A lot of these startups, they're not going to be able to make it because they're not going to get their next round of funding. And the almost Ponzi scheme, I call it, of VC capital is going to be in some major trouble for the next, I would call it, 6 months at the least to probably 24 months on the potential how bad it could be for the VC space. Money's drying up, and I don't think it's going to get better. I think the VC space is going to get uglier before it gets better. And so basically a lot of these startups, maybe have a few more months of capital, and then they're going to have to start cutting off big time employees. And job losses are going to be coming in by the thousands by the day, and then the tens of thousands. And so, all these unprofitable businesses that, they're running through the money quick, it could get ugly really, really quickly, okay? For a lot of these, private companies, essentially, okay? And if they don't, and most of these companies don't have a path to profitability anytime soon. That's the worst part. If you're gonna ever invest in a company that is a money loser, you better have a path to profitability. And it's like, when do margins improve? When do we get to profitability? And in something, if I ever invest in companies that are unprofitable, I know like they're gonna likely hit profitability in this month or around this quarter, right? With a lot of these VC companies, they don't have any target like that. It's like, oh, maybe we'll make money in like 2026. You're gonna be lucky to get to 2023. That's just a bottom line. And so this is just an ugly situation. The economic cycle, I think we already peaked, right? 2021 was a peak, and now we're starting to kind of, come down the slope. And it's kind of hard to sometimes recognize, are you like on the down part of the roller coaster? What's going on? But as things accelerate and it gets worse and worse, you start to become more and more evident that you're in a down cycle in the economic cycle, and you're going into recession. And there's just no doubt, I think when you look at everything we're looking at, that we're in that down part of the economics cycle now. We're not in expansion mode anymore, I can tell you that much. We're not in expansion mode, we're in contraction mode now. And it's an ugly thing to kind of go through. United States housing starts have obviously ballooned over the past decade. It just ballooned. And this industry employs so many people, directly and indirectly, it's ridiculous. And I'll be honest, these folks that have jobs building all these homes, those jobs are drying up in 23, man. They're drying up in 23. And it's sad. All these construction workers that work on these homes, and, all the plumbers and electricians and the people that do the countertops and, the people that build the backyards and put in the pools and stuff like that and the landscaping. I'm telling you guys, those jobs are going to dry up in 23 in a massive way. And the reason being is new home orders are going to dry up over the summer and into the fall, and that's going to be all the orders that are set to come, through in 23. So all of a sudden, all that work starts to dry up in 2023 for all these construction jobs and whatnot, and all these folks that bought a new truck and they bought a new house themselves because they were making good money. Their job's not going to be there anymore. Their income's going to go down. They're going to, if they have any income, and it's just going to get bad really, really quickly when it comes to construction industry. And so, that's just That's bad to see, because I mean the amount of people that are employed by real estate, whether it be somebody actually nailing homes on a house that's being built, or somebody redoing a pool, or somebody selling a property, or the mortgage people, the refinance people, like the amount of people that make money just from real estate related things, it's going to be in a bad place in 2023, a very bad place, and that's unfortunate, man, and that's not going to be good for the economy, obviously, right? The multifamily sector is in a bubble as well right now, right? Multifamily last year volume grew to 116 billion. This year it's likely going to be even more. And it's interesting. Like sometimes it's important in the economy to not just look at data, numbers, and to think with common sense sometimes, and say, do we really need to be building all these homes and apartment complexes and multifamily like at record numbers, right? Do we really need to be doing that? And conventional wisdom would say, well, yes, because rents and mortgages are, and how much a home is worth has been going up and up and up. So we need to build. And so that's what a lot of people think, right? But all along, one of the main reasons home prices have been going up so much so rapidly is, in my opinion, froth in the market. Froth in the market means essentially real estate investors just buying properties left and right, corporations buying properties left and right? Flippers being in the market, because the market's been great for flippers the past several years. So people flipping houses, that's usually a sign you're in a bubble in the housing market, when flippers are going crazy, flipping houses left and right, and everybody wants to be a house flipper, right? You obviously have a lot of people that, because they had a good job or their net worth went up or whatever, right? They move out. Maybe they had roommates before, now they don't have roommates. Maybe it's a situation where they used to live with their grandparents, now they don't, or their parents or their uncle or their aunt, and all of a sudden now they don't, right? And they live by themselves because they've been doing pretty good. And so it is just kind of like false illusion, because you have froth in the market, like you need all this extra housing, and it's like, hey man, we need to build, when really the population as a percent has hardly gone up in the past decade, like hardly gone up. And so you're looking at all these homes being built, all these new apartment complexes, all this multifamily. I'm in Arizona, and I'm looking at some of these projects being built. I was so far out on the west side, I thought I was in California the other day. I was like, holy smokes, they're building out this far now? I was looking at some of these apartment complexes being built out there, and I was like, this ain't happening, man. I'm watching some of these, they're building so far out there, and I'm like, dude, they think they're going to sell these things. They're not going to sell these things. There's not going to be the demand for it, because we're going to be in recession by the time these things open. And those apartment complexes are going to be sitting vacant. And they build offices. I was out at like 150th Ave or something. Like literally, I thought I was at the nuclear power plant out there. And I'm like, dude, they have no clue. Like this ain't selling. Like when these properties open, when these offices open, like it's going to be dead. And it reminds me of, when I moved out of my parents' house, I moved to an area called Westgate, where they had built a lot of stuff. And that wasn't even considered anything close to as far out as this area. And that area was so dead back when I used to live there. So dead. They'd overbuilt. And now I'm looking at some of these areas that are way the heck out in, cupcake land out there. Man. Those babies are going to be unfilled. And those apartments will be filled maybe in 2025 or something like that. They're way overbuilding right now, okay? I was looking at this recently because I was thinking about all this, and I was looking at my old apartment when I moved out of my parents' house when I was, that was in 2011. 2011, when I moved out of my parents, I moved to this apartment community called Metro at Zanjero back then, but I found the new name. They call it Zone Lux now. That apartment I used to pay back in the day, which now is $1,610 to $1,675, that apartment back in the day, I used to pay $750. Now, that apartment complex, which was really nice back in the day, that was built to be a condo complex. But guess what? It opened during the Great Recession, and no one wanted condos anymore. No one could afford a condo, so they went through, I think, bankruptcy, and then an apartment company bought it out, right? A lot of that's going to happen over the next few years. Just wait on that. That whole game's going to play out as well. And so I'm looking at that price. I'm like, that's just ridiculous. It's almost $1,000 more, almost $1,000 a month more than what I used to pay back in the day. So basically, the price of this apartment has over 2x'd because of the froth in the market. It's over 2x'd since I used to live there, right? And, back then I was working at Quick Trip, and I was like, has pay gone up? Has pay at Quick Trip over 2x in that same amount of time? Heck no. Estimated average annual for a relief night assistant back in the day was in the 40s, 40 something thousand a year. I think it was 44,000 or something like that. The estimated annual, now it's 57. So it's like, cool, it's up, but it surely hasn't doubled. Meanwhile, gas prices have doubled since then. Meanwhile, your rent has doubled, all those sorts of things. So that's just, the economy's not adding up. That's all I'm going to say about it. The economy's not adding up. Nothing's making sense. And when nothing makes sense, you're in for some big, big trouble, okay? Now, the message I gave to the private stock group last night is this, okay? I said, just a little 1:45 a.m. thoughts. 2022 is the year of the fight. The entire year is a battle in the economy and the stock market. Can't get too excited for anything. Inflation, the Fed, oil, gas, commodities, unaffordable real estate, declining savings rates. We didn't even touch on that. Retail and inventories piling up, supply chain mess, declining stock and crypto markets, and are all currently going on in 2022. Add in potential problems in the back half of this year of job losses, real estate crash, Fed raising rates, and not helping the economy while the economy falls apart. 2022 is a mess. There's no easy victory here. This is a 12-round boxing match, and you better be ready to fight every round while not giving up, getting tired, or losing focus. I invest in the stock market like a good fighter would box. You don't just throw a haymaker and hope it connects. You jab, you throw some combos, you defend yourself, and when you get the opportunity to land some punches, you throw. You take what you're given. You don't panic when you get hit by a punch. You're gonna get hit. You're in a fight. That's part of it. In the stock market, I take what I'm given. I add to positions I love for the long term. I don't panic when I'm down on positions short term. I don't pray to connect on a haymaker, short-term call option or something. I understand that I'm in a fight and I will take damage. I play defense so I don't get knocked out, but I won't curl myself up into a ball and not throw punches. A year like 2022 is what separates the men and the women from the boys and the girls. Be prepared to fight until the bell rings. And that's just the exact way I view this year. And by the way, if you're looking to join my private stock group and get access to the private Discord chat, all the course curriculum, things like that, check out the pinned comment down there if you're looking to apply to become a member. But this is that year where you can't get excited about anything. There's more bad news likely coming. What that does to the stock market is anybody's best guess, because we've seen before. I've seen it many times, just in my amount of time in being in the stock market. We get a bunch of bad news and the stock market goes up and it's like, how does this make any sense? But I've also seen where bad news comes out and the stock market goes down. So you never know how the stock market will react. But in terms of the economy, it's going to get worse before it gets better. In terms of real estate, it's going to get way worse before it gets better. In terms of layoffs and job losses, it's going to get way worse before it gets better. And so these are all things you got to at least consider and be mentally prepared for. There's a lot more bad news coming, and it's likely just going to get worse and worse when it comes to bad news. So I stay focused on long term. I add companies I love for the long term, things like that, but don't get your hopes up that the market recovers, the economy recovers, and everything's going to be okay, because it could be a bit. It could be a bit, okay? Hope you guys enjoyed this as always. Much love. I'm going to try to respond to all comments in the first hour this video is out, so leave me a comment down there. Much love and have a great day.